Saudi Arabia just dumped the US dollar. What this means for the United States and inflation could be a big deal. A lot of people are talking about this, and a lot of people have been asking, Kevin, what is your opinion? For example, our good buddy, Andre Jick, made a fantastic video on this topic. Great editing too, way better than the editing that I will do in this video, which is next to zero. But what I'm going to do is give you a quick background of what's going on, and then I'm going to talk about implications for this. So first of all, if you don't know yet, BRICS, Brazil, Russia, India, China, South Africa. Now, that is an organization that has put about $100 billion of funding together, and they can give emergency loans to each other if they need to. And BRICS has regularly been thought of in the same sentence as de-dollarization. In other words, the more these countries try to have a common currency or common trade agreements, the less powerful the United States is. Fair. Now, what's interesting is starting in January 2024, BRICS has doubled in size. It probably shouldn't really be called BRICS anymore because now it includes Iran, the UAE, Ethiopia, Egypt, and Saudi Arabia was announced as a member, but they actually pulled that back and said, we're still studying if we want to be a part of it. Turkey has applied to join, and Malaysia and Thailand may end up joining as well. Now, Argentina was invited, but President Javier Milei, chainsaw guy, decided against it. Milei indicated that his ally is the US and Israel, not China and Brazil. So what does that reiterate to you? Interesting. Us versus them. In other words, BRICS versus the West, which would be the Euro, the US, France, Canada, Germany, Italy, Japan, the United Kingdom. These are sort of your traditional Western allies versus now the Brazil, Russia, India, China, South Africa, and then potentially the others that I mentioned as well. So people are sort of picking sides, but what a big deal is that at the same time as Saudi Arabia is reviewing the potential for joining BRICS and being part of the group that's now being called BRICS Plus, you have this announcement on June 13th that Saudi Arabia will not be renewing an agreement they signed with Nixon back in 1974 to sell oil exclusively in the US dollar. Both of these things happening at the same time are sending the signal that the US is losing its strength and power in the international community, and that American exceptionalism is decaying away, and the dollar's going to go to crap, and you're going to be screwed with inflation forever. Okay, now we'll talk about how to deal with all of that in just a moment, but first, it's worth thinking practically. Why? Why would Saudi Arabia ice the United States? Is it because Saudi Arabia is pissed off at the United States? Is Saudi Arabia trying to send a signal that the US sucks? Maybe. But it could also be that Saudi Arabia is no longer the #1 supplier of oil for the United States. It might have to do with the fact that Saudi Arabia used to be the #1 oil producer in the world. But this has flip-flopped thanks to the shale and fracking revolution in the United States. Case in point, the United States, as listed here, is now the #1 oil producer in the world, and we import less than 1/3 as much oil as we used to from Saudi Arabia. In other words, we showed Saudi Arabia up in the oil market. We blew them out of the water with oil production, and we're buying less oil from them. So back when this agreement was signed, where the dollar just left the gold standard, and we needed Saudi Arabian oil, those factors have essentially flipped. Now we produce the most oil in the world. We need Saudi Arabia probably not at all. In fact, probably the oil that we do buy from Saudi Arabia is just to sort of maintain some relationship with them. We probably don't need any oil from them. And we need less confidence in the US dollar now than what we needed back then. Now, I know that might sound crazy. You might be thinking to yourself, Kevin, I don't trust this dollar at all. And trust me, you shouldn't. You definitely shouldn't keep your money exposed to the dollar. Let's be clear about that. Hashtag not personalized financial advice. But back in 1974, when we just left the gold standard for a few years, inflation expectations were skyrocketing, the opposite of what's happening now, and inflation was skyrocketing still. Also, the opposite of what's happening now. Yes, inflation did skyrocket, but now it's not skyrocketing anymore. If anything, it's disinflating. And so we actually need less support for the dollar today than we did then, because back in the 70s, people were like, what? Money not backed by gold? This is a scam. Every fiat currency that has ever existed before in history has failed, and your boy Kevin is out of coffee. So why should we trust it? Well, because Saudi Arabia exclusively uses it. They're the largest oil producer in the world. Notice how then is actually almost the opposite of what we see now. We are the largest oil producer. We don't need them to reiterate our fake funny money anymore. And if anything, Saudi Arabia's top client just became China, and it entirely makes sense that they probably ought to start trading oil in renminbi, Chinese currency, as opposed to the US dollar. Now, I'm not encouraging de-dollarization, I'm just saying it kind of makes sense. Now, this is where it's kind of worth thinking about the petrodollar and the importance of it in the first place. About 80% of global trade is traded in the US dollar. The oil market in 2022 was estimated to be about $1.4 trillion. And so 80% of that is somewhere around $1.14 trillion. Okay, cool. So if the oil market is $1.14 trillion, how does that compare to just our GDP alone? In other words, our GDP that's traded in dollars, right? Gross domestic product. Our GDP is 24x the entire oil market. So yes, the oil market seems like a really big deal, but let's be real, the US economy itself is 40% larger than China, and China's GDP is twice X all of the other BRICS members from last year. So like we are huge compared to all of them in the BRICS at the United States. And even if all oil transactions were conducted in some other form of currency, we could slow bleed this or it all evaporates tomorrow, there would still be plenty of demand for the dollar, given that we are the largest economy in the world. Now, could that change? Could the United States suffer depopulation or, a slowing population growth, much like China's experiencing now, although their economy's in worse off shape than ours is? Could the United States economy end up stop innovating? Could China eventually have a larger GDP than the United States? Of course. All of these things could end up happening in the long term. And frankly, they probably will. So now the question is, what do you do about it all? And does it matter? Well, in my opinion, the answer is it doesn't matter. The reason it doesn't matter what's going on with the petrodollar or whatever else is you shouldn't be exposed to the dollar anyway. In my opinion, one of the best things that we can do is just get out of exposure from dollars and get into assets. Assets which would be things like real estate or stock exposure, or for some folks, those are cryptocurrency exposures. In other words, we don't actually need to be exposed to the dollar at all. We can transact with the dollar and then get our butts out of it, so to speak. In that case, you're not exposed to the risks of a dollar that's losing its purchasing power. Now, is it possible that in the future, the United States becomes something like the British Empire, where we're much less relevant than we used to be, right? British Empire, now the United Kingdom, much less relevant than the British Empire was, sort of like the Roman Empire. They all sort of die at some point in the future. Anyway, yeah, at some point, the United States dominance is going to wear away. But is this really anything more than a partnership amongst others to counterbalance the big partnerships we have now? Not really. Now, of course, why is the topic then of de-dollarization so popular? Well, it's popular because it, in my opinion, represents this growing discontent amongst Americans who fear that America's losing its exceptionalism. Could be because of unaffordable housing, lost faith in the Federal Reserve, frustration over crime, borders, political, polarization on social media. Practically, a growing BRICS sort of deepens tensions potentially between BRICS and the United States and sort of Western allies. And I think this is why Saudi Arabia is on the more cautious side of like, oh yeah, I'm going to go all in and join BRICS, because they realize like a vote for BRICS is sort of a vote against the United States. So you've got some folks here suggesting, hey, you know, okay, like maybe you don't want to blow this up so quickly because the US is still pretty dominant. But again, how much does this really matter long term? In my opinion, not terribly much. In my opinion, for right now, the focus continues to be build assets. Build your exposure to real estate assets. Consider investing in things like what I talk about in the courses on building your wealth, where I send stock buy sell alerts when I see a trend in the stock market. Not guaranteed to make money, but I always send alerts when I see a trend or spot a potential trend. Real estate 0 to millionaire investing. We've got Kathy Wood speaking at our event this weekend. We've got the do-it-yourself property management and renovations course, the gold course on entrepreneurship and productivity. A lot of cool things to choose from. These are the sort of investments that I would make. But fretting over de-dollarization, I don't think is the best. So this is my take. I see it as a growing, slow-moving trend, but not something that really creates a lot of fear for me at this point. Anyway, I'm hedging myself anyway, but just not being exposed enough. Thank you so much for watching, and we'll see you in the next one. Goodbye and good luck. Advertise these things that you told us here. I feel like nobody else knows about this.
We'll try a little advertising and see how it goes.
Congratulations, man. You have done so much. People love you. People look up to you.
Kevin Paffrath there, financial analyst and YouTuber. Meet Kevin. Always great to get your take.
Even though I'm a licensed financial advisor, licensed real estate broker, and becoming a stockbroker, this video is not personalized advice for you. It is not tax, legal, or otherwise personalized advice tailored to you. This video provides generalized perspective, information, and commentary. Any third-party content I show shall not be deemed endorsed by me. This video is not and shall never be deemed reasonably sufficient information for the purposes of evaluating a security or investment decision. Any links or promoted products are either paid affiliations or products or services we may benefit from. I also personally operate an actively managed ETF. I may personally hold or otherwise hold long or short positions in various securities, potentially including those mentioned in this video. However, I have no relationship to any issuer other than HouseHack, nor am I presently acting as a market maker. Make sure if you're considering investing in HouseHack to always read the PPM at househack.com.